Hello, I'm Edward de Mera, professor at various business schools and Pharma faculty member. This short video will address how to optimize the agility of the various brand teams in a Vuca world while optimizing a pharma company's cross-brand resource allocations. Pharma companies adapt to this Vuca world by implementing agile teams, so-called scrum teams, which increase the agility of the various brand teams, speeds up decisions, empowers those teams by limiting the number of stakeholders required to a specific decision-making process to those stakeholders that are really required. A typical pharmaceutical company will first start by developing global brand plans, then send them to their affiliates, and the affiliates will write their brand plans during the summer for the fiscal year following that, from January to December. Then at a certain point in the autumn, financial teams get involved, which then put all the numbers together. This process is essentially not agile. It has two or three major drawbacks. The first drawback is that after the summer, you're blocking budgets across the various brands for the whole of the next year, when in a Vuca world, all sorts of things may happen. The second challenge is that the financial process will involve some sort of haggling with certain targets being set by financial people and budgets potentially being cut at a certain point in time. Now, some go as far as no longer setting budgets on the basis that it is difficult to do in a Vuca world. Now, this is, of course, a little bit problematic when a stock market has valuations of price-earnings ratios which are of the range of 30. You're expecting 30 years of profits based on the acquisition of a particular stock. So long-term financial targets, of course, need to continue to exist to satisfy the shareholder stakeholders. Two key objectives to be achieved is, on the one hand, to satisfy the long-term strategic investment planning in an optimal way. And the second objective is to maintain agility in the short term in the various affiliate brand teams. One way to increase the agility of the various brand teams is to require the brand teams to get involved in the development of various strategic options. Various strategic options, which are groups of successive key leverage points, then for each of these on a one-year horizon to compute the costs and the approximate returns that each of these particular strategic options will actually deliver. Reconciliation of the longer-term strategic attractiveness of various brands in a company's portfolio with the short-term financial flows and the responsiveness that a pharma company sees to different short-term investments can then help align the long-term and the short-term while maintaining an agile situation where, for example, if something happens with one brand in the portfolio, the other brands are immediately prepared to go to plan B. For more information on this subject, either review the 20-minute e-learning on this particular subject on the Pharma website, and or leave your name and email if you have a further interest for this subject.